and moving higher, following the release of $9.604 million barrel for oil by the EIA. In this report, we aim to shed light on the factors driving WTI's price and asset future outlook. According to news reports, OPEC and Guyana were in stock this week for the country to participate in OPEC meetings. By participating in meetings, it could be seen as a stepping stone before joining the group itself, a move that could potentially allow the group to increase control over the global oil market through tightening their grip on the supply of oil. Interesting, on Thursday, a Canadian oil company named CGX announced that it had made a significant discovery of oil on the coast of Guyana at the Quarantine block located 100 nautical miles from the coast of Georgetown. The development appears to be elevating the region's status as an oil-producing nation, which could be tied to the attempts made by OPEC to include the nation in its deliberations. However, it is important to note that the country's vice president has stated that the country was not interested in joining OPEC, therefore striking down any speculation that Guyana would be joining the group for now. On Wednesday, the EIA released 9.604 million barrels of oil into the market, vastly exceeding market expectation of a release of 1.757 million barrels. The much higher than expected release appeared to be indicative of a continued tight oil market, with demand appearing to remain strong despite early indications of a slowdown in the US economy. However, we note that tomorrow's financial releases during the Asian session could heavily influence the price of oil. During tomorrow's Asian session, market analysts are anticipating China's NBS manufacturing PMI figures, which are expected to shed light on China's limping economy recovery. In the event that the PMI figures are indicative of a deterioration in economic activity, we may see the price of oil declining, where should it be indicative of an expansion, it may provide support of oil prices, as China is the world's largest oil importer. Norway announced 19 new oil and gas projects on the country's continental shelf, investing approximately $18.5 billion to facilitate the expansion of existing fields and the creation of new ones. The new projects, according to the government, is in order to facilitate Europe's energy needs in the long run, thus decreasing the continent's dependency on countries which may consider as malignant. However, following the announcement, the government was sued by environmental groups who are seeking an injunction on the projects, claiming that Norway has violated a 2020 Supreme Court ruling that requires the government to assess global impacts on the environment from field developments. In conclusion, should Norway continue to expand its oil and gas fields, we may see a long-term increase in price of oil, as the expansion could signal expectation of higher demand in the long run, despite climate pledges to reduce dependency on non-renewable sources of energy. Thank you for watching.